Hey there, and happy Monday to you. It's an expiration week. We are going into the third week of March here, and wanted to talk about a couple things that happen in expiration week that you want to watch out for. But first, before we do that, I wanted to start with the Bitcoin chart and a couple things that you can do when you are swing trading to stay in some of these swings is really as long as possible. And then we'll talk about some of the day trades in the ES specifically from today. So, obviously, the crypto space, Bitcoin has been on a tear the last couple of months. Really hasn't been talked about a lot until the last few weeks, breaking out into new highs and then especially getting back up above 50,000 here. And so, uh, my strategy for the crypto space has always been kind of a 50-50 approach. And this is a good one because you don't have to pick the top and the bottom and then constantly feel like you're day trading in and out. So what I've done in the crypto space, mostly with Bitcoin, Ethereum, and I've got a couple other tokens that I don't really swing in and out of. I'm just holding them. But so for the most part, we're talking about Bitcoin and Ethereum, and uh, you can use basic retracements, and in this case, we had an extension that pulled back to its 50%. I do have the 21 EMA on the chart that I put up there a few weeks ago. You can use some basic trend lines and look for pullbacks to the trend line, and then as you start to go steeper, those trend lines are going to get steeper, as you'll see as we flip to the ES as well. But one of the things that I like to do, just like we do intraday, is getting long on the pullbacks and then trailing the swing lows on the way up. And right here I have the daily chart. If you are trading the currencies, or the cryptocurrencies rather, you want to put on the 24 hours worth of data on your TOS platform. If you're executing on like a Coinbase or some other platform where you're buying the currency, the crypto versus the actual the futures contract, BTC, the charts are pretty much the same, but you'll want the 24 hours worth of data on your chart versus the ES where we're just looking at the regular trading hours. But let's say you get long in the pullback, and so I added a fair bit at 40,000. And so like I said, I split my position in half. I've got 50% that's kind of just the buy and hold, if you will, and then the other 50% is what I'm getting in and out of, and that way, if I don't have to pick the top or get in at the bottom, I can just catch a chunk of the move and then take some profits, let it pull back. I still have that other 50%. So like for example here, we rallied off the 40,000 and we started to consolidate through here, and I took some off, took a little bit of profit off, and we kept going higher. And so I still have what I would call like the core position. And so going higher, I'm still participating in that move. I didn't buy any more after the next breakout. Sometimes what I will do on the ES, if we're breaking into all-time highs, is look at where that all-time high is and buy the breakout into all-time highs. In this case, it was at 70,000, and with the crypto space and my original position, the growth is so exponential. I didn't feel it super opportunistic to be buying necessarily at 70,000. You go from 70,000 to 140,000, that's a 2x move versus going from, 40 to 120, that's a 3x move. So looking at where your initial buy point is and kind of how can you shift the risk to be asymmetrical so that you have less risk, more reward is always kind of the main focus. So trailing swings or coming in and trailing each candle, especially if you start to get a really strong rip. But what I wanted to mention is something that I could have done a little bit better, is if you go to a weekly chart. I know a lot of times swing trading, we're talking about, sometimes only a couple of days to maybe a few weeks. But some of these swings, if you will, whether it's swinging, an Apple or a Tesla or a Microsoft or, one of the FANG stocks or one of the bigger players with options, or buying the underlying, going out a little bit further, less applicable to options because you're going with a specific expiration. But in this case, with Bitcoin, going to a weekly chart is going to smooth out a lot of those one-off days. Like if I flip back to the daily chart, we had last week that big day on the 5th where it would kind of look like it was going to turn over and maybe make a pullback. Ended up being a bearish engulfing pattern. Then we've kind of just drifted up, and then here we are back into all-time highs. So I'm glad I had the original, the core position on, and only took off a chunk of it as a swing part of the position. But had I been a little bit more gone out a little bit further in the time frame to a weekly chart, now you're really smoothing out the chart to avoid some of that noise. And I've found over the years, as I've trade more and more, get older and older, my tolerance for a bigger time frame goes up. And so yes, I day trade the E-minis every day, but my tolerance for some of these bigger swings, and being in a position and not letting it affect me, you will build that sort of resistance to wanting to take the quick profit over time. And so I'm going to try to lean on the weekly chart a little bit more to do that versus looking at the daily chart and trying to see it on a weekly time frame. The more I look at some of these swing trade positions, especially in the cryptocurrency space, but even in stuff like Tesla, Nvidia, Apple, Microsoft, these bigger names, the weekly chart can be a really helpful way to slow things down. And just by simply buying above the hammer that was back at the extension here at the 40,000 level. And just even if you just trail each candle, that's totally fine. You don't have to wait to trail swings on the weekly chart because you have 5 days in each candle versus one. And if we flip over to the ES chart and go to just the last couple of months, looking at the weekly chart certainly smooths things out. We have a couple of red bars in here. The most recent red bar here last week did break the prior candle's low. This guy back here did not. And then we had basically the first week of the year was a down week, but then everything else has been green. So you can kind of infer some of that from the daily chart just by looking at the trend line. And even if you don't have a 21 EMA up there, just throwing on a simple trend line on the chart, you can kind of help you stay in that trend. But I've been kind of looking at the weekly chart more and finding that I do gravitate to it a little bit more on some of these swing plays. So that's all I wanted to touch on the cryptocurrency stuff. As far as expiration goes, we have the March contract is no longer the front month. We are now in June. It's the 11th of March. This Friday will be expiration. So you want to be trading the June contract, which means we have some volume, some trading occurring in March, some in June. You want to make sure, like in TOS, if you just do /ES, that is going to put the front month as June. So we got HMUZ, and if we go start putting the M in, you can see June. If we go back and start ESH, then you can see the March contract. And if you look at the prices, they're going to be slightly different. And so if you're trading on TOS, or if your charts are on TOS and your trade ladder is on Tradeovate or Infinity or some other platform, make sure that your charts and trade ladder are both on the same month. And so this week can be a little bit wonky because you have both contracts trading. I have stopped trading on expiration Fridays, and I take that day off, and I just find that it doesn't yield a whole lot of profits net when I look at all of the expiration days. So I'll take those days off. This week we have a little bit of news. That CPI number tomorrow morning before the bell is going to be fairly important. Jobless claims on Thursday, and then, like I said, the expiration on Friday. So you want to be a little bit more, I guess cautious is the word, but you want to just kind of double check, make sure the setups are meeting your criteria. Make sure they're actually valid setups that you're taking this week, and this is not the week to be extra aggressive, is how I would phrase it. So if we just walk through today, a couple of 1 minutes, the 15-minute, I guess we'll start there. 15-minute opening range breakout, broke to the downside. Let me get rid of all this stuff and we'll redraw it. And this one. So I've got our 30-minute opening range marked here. The 15-minute, we gapped up. 15-minute broke to the downside, and I ended up moving my stop to -4. We got a nice reaction, but didn't quite make it to the +20. So if you draw the retracement from the swing low yesterday's close to highs, we almost made it to like a half back for what I would call the half gap fill, and then we turned around. So that was the 15-minute. And if we go to the 1-minute chart, there was we started moving down, and there was a little hammer in here, right here, ended up being right after the 30-minute mark. You'll notice my times are now they're an hour earlier. So the times on the x-axis are Pacific. In Arizona, we do not do daylight savings time, which has its pluses and minuses. Now we're on 6:30 a.m. open. We were in 7:30 Mountain Time over the winter. So if you're looking at my trade log, I always make a little note DST on today's day, Monday, that we've done daylight savings time, and so then my times will be on Pacific. If you're looking through my trade log and you're trying to line them up, if you're on Eastern or Central or whatever other time zone you're on. So there was this little hammer in here, and obviously you can see that stopped me out. It broke the high and then rolled over. It's a little bit hard to see, and just as a side note, this is one of the reasons why I don't, like, if I'm not trading on a specific day, I don't go back at the end of the day and look at, look through the day and try and find like the winners and losers from the day. Because when you go back, like, your eyes are they're going to gravitate towards the winners. So it's fine to go back and look at the day and just, oh, what happened today? But I'm not going to scrutinize it and say, oh, well, I didn't trade on Wednesday, and so let me see how I would have done if I had been trading. Because it's in hindsight. It's not, your eyes aren't seeing things in real time with that information. So sometimes, I always go back at the end of the day and review my trades, that I take. That's why the trade log is so beneficial. I can go, okay, 701 along, and I can come in here and review what I did during the trading session. And in most cases, what I review in hindsight, I'm looking at the trade and I say, yep, I would have totally taken that trade again. Sure, it stopped me out, but looking at it now after the fact, if we pretend it was 701, this is what I'm seeing here. There is the hammer, and it's like, okay, yep, bottom of the 30-minute range, the tail sticking down below, great looking setup. I look at it, review my trades after the session's over, usually in the afternoon, but doing a little bit earlier today. And I say, okay, yep, nice little doji hammer there. Would take it again, and it's in certain cases where you're going in after the fact and looking at reviewing your trades. If I'm starting to see a lot of discrepancies, or if I'm like, okay, I'm reading my notes here and I'm not really seeing, what was I looking at, or scratching my head a little bit. Sometimes that happens, and I just kind of make a mental note. If I start to see that a couple days in a row, it's like, yeah, maybe I'm not reading the market very well this week, and just want to be a little bit extra cautious, or kind of double check my trade entries as I go to place the trades. But by and large, as I review the trades after the fact from the session, they tend to line up with what I'm seeing, because you're creating a criteria that's repeatable. That's how you have like a repeatable process, if you will. And then let's see here. 733. So we had a couple of retracement shorts coming down. That they didn't necessarily all make it to their 50%. So like we started up here with some, and then The next one made it to the 50%. Next one, 50%. And then once we hit the low of the 30-minute, this one didn't quite make it to its 50%. And the way I drew it here was like this. So we didn't quite make it to the 50, but we had made it to the negative 23 from the prior one here, like that. And so then I drew it from here. We had like a really tiny one like that, but when it came to draw the next one, I used that same anchor to go down to lows because that put the 50% a little closer to the 30-minute low versus going the lower high. At the end of the day, it really didn't matter that much. They were pretty close, like whether you use these two swing highs, but I like to try and get the retracement that's down near the bottom of the 30-minute low to be fairly the entry to be close to that 30-minute low if you're going to try and short below lows. And then let's see, 733 had a short. Oh, that was the halfway back of the day. So that was here, full halfway back of the day. We came up. Here we had broke into the 30-minute range just a little bit, made this double top, but before we actually made the double top, we had this inverted hammer. So I did take a stab at that short, and this one got that, I guess we'll call it the 4-bar breakdown, where we had 4 red bars in a row, each candle making a lower low. So I just came in here and trailed my stop above this bar, and I think that was like 3.5 points. Move, and then things started to change direction here, and we had this. This is kind of a could go either way situation where we were still below the 50% daily short, but if you look at the swing highs, we have higher high as it relates to the prior one, higher low, higher high, higher low, higher. Not higher high, but a higher low put in on this hammer. So it was, kind of forming a triangle at this point. We were underneath the halfway back of the day, but we were starting to re-enter the 30-minute range. And so I'm okay if you want to take this hammer long. You're already out of the short, and that's another indication. Okay, we had this 4-bar breakdown. Then we turn to the upside. We're sitting on top of the 21 EMA. We're also sitting on top of this halfway back long. But keep in mind, we're still below the 50% retracement short. So you kind of have both of them in play. But if you want to take a stab at the long hammer here, I'm fine with it because the long lines up with the bottom of the 30-minute range. And that did get a bit of a run up. Not quite to the top of the 30-minute range, but a decent little move up. So that's the day, kind of in a nutshell here. Keep your focus this week, and it's okay to trade a little bit lighter on these weeks. And then Friday, I won't be trading because it's Expiration Friday. So if you have questions, drop them in the comments below. If you like these videos, give them a thumbs up, and hope you have a great week of trading.